Welcome to the Australian Stock Market Show. Tonight we will show you our top market-beating ETFs and dissect the recent All Ords meltdown. I'm Philip Tortevsky, and joining me are Wealth Within professional traders Janine Cox and Pedro Banales. And together we're Australia's most trusted stock market educators. Good evening, team. How are we?
G'day, Phil. How are you?
I'm very good. I mean, the market has had a interesting week again.
Yes,
a lot of
indeed.
stuff to talk about.
Too much happening around the world, but is
Yes.
Australia immune from all of that?
Well, that's why we're here, and we're going to discuss all of that tonight. But first up is our hot stock tip, Spartan Resources. Pedro, mate.
All right, yeah, so I've got a beauty for you guys today. It is Spartan Resources, as you mentioned. It's a little gold miner, and it's a junior gold miner, if you must. Obviously, it's in the materials sector. Up today, 6.34%, so I might have been one day too late, but as you'll see later, it does have more to go. Now, Janine, I know you're looking at it. It is over $1, okay? So that's a one tick.
No boxing gloves for you tonight.
No boxing gloves out.
Damn.
And it is within the top 300. So before you say it's a specky, it is fairly, sized.
Nice market cap, 1.8 billion.
Exactly, yes.
And like stocks around that level, that size?
Yeah, not too big, not too small.
Okay.
That's right, just
go
right.
Just
Yeah.
right.
The Goldilocks stock, right? So the beauty about this stock is this company is that they've actually found the gold. It's not one of these specky gold miners that are looking for gold and you're hoping that they'll find it and then the price will spike once they find something. They've found the gold. It's high grade gold, and now they're drilling for it. So they're drilling underground. They're just trying to extract it out of the ground.
Okay.
Right.
So if you have a look at the chart, it's reflective of that price movement. So we can see on the monthly chart on the left, and I'll expand that one out first. Volume has been expanding into that move, which is really promising. And as we mentioned last week, volume is a good indicator of something to come.
Activity, yeah.
Activity, exactly. And what I like is that it's actually shot up above that $1.10 resistance level, which provided support in the past. So one hurdle is done. And it's actually bounced off that level as well. So it's been trailing around it. You can see here on the monthly chart, it's forming a nice little sideways pattern. And I believe that the next resistance level is at that $2.80. So $2.80 was a natural support level in the past. And if it does indeed go to that $2.80, then we are looking at around 90% growth.
Now, you had some good examples last week with the volume. What does the falling volume since the peak indicate, or is that more now we're seeing a bit of consistency perhaps in terms of the levels of volume coming through?
Well, I believe that the initial spike in volume was the fact that they found the gold, that they've gone through all the regulations and so on, and now they're just waiting to see whether they can actually extract it from the ground. So it might just be a little bit of a trailing off, but we do usually see around these patterns volume coming into it and then eventually trail off for it then to come back. And I'll quickly jump on the weekly chart here and just want to show you these patterns that we've seen form in the past. So we have these consolidations, price rises out of them, then again price rises out. Now we've got a consolidation currently happening, and what's interesting is that this last one was around that 30% fall before it shot up, and now we've got around the same amount, so around that 30% fall, and now it looks like it is moving up today. Like I mentioned, it's over 6%. If we get up above that $1.60, I think this one is looking great, so watch out for this.
Yeah, it speaks a lot. I mean, when you're looking at those consolidations, when stocks are running into trend, sellers have got all the opportunity to get involved, yet they don't. Markets consolidate sideways, and we're seeing continuation upwards. I mean, all positive signs leading to, is 280 the ultimate target you're thinking there, or this potentially is in a nice long-term uptrend now when we could see past $3-4 at some point?
Exactly. If gold prices tend to rise more, and I know Goldman Sachs is forecasting gold to rise another 8% this year, if it becomes lucrative for them, then there's no reason why this stock could even keep on going up to that $11 if it becomes a solid gold miner.
So you're thinking from 280, 11 next stop?
Yeah, there's not much resistance around there. Actually, no, next stop would probably be around that $5.80.
So what type of investor is this one for?
Yeah, good call. Not for the faint-hearted, not for the early type of investor that isn't well versed in the market. Definitely you want to put your technicals on here and you want to listen to what's happening with the company itself. Any little hiccup in extracting that gold from the ground could actually make this stock fall quite heavily.
And what about what we see sometimes is when the news is best, and don't you hate this too, that when you see a stock that perhaps you've got and the news comes out and it's great, and then the share price falls.
Yeah, exactly. Yeah, sell the news.
So watch that.
Yeah, definitely. But I believe that on good news, this one will just take off.
Yeah,
Okay.
especially coming out of that base. All right, fantastic stuff, Pedro. Well, that is it for our weekly hot stock tip. Right now is your opportunity to get involved in the show and have your questions answered. So call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of Dale's book, Accelerate Your Wealth. So dial 03 9290 9988. Now, while you do that, Janine will give her analysis on the All Ordinaries Index.
On your screen right now is a chart of the All Ordinaries Index. I thought you were about to do the chart for me. You sure you don't want to have a go?
I would love to, but we've already had a go yesterday.
Let's chime in together anyway as we go. So what I've got here, and you're probably wondering, what is all of this over Janine's chart? Well, look, it's not uncommon to see a messy chart on my computer, but I get a bit carried away.
Yeah, they don't call you Mr. Squiggle for no reason, right? Or was that me?
That's you. All right, now looking at the chart there, you can see the history of the All Ords, and we've seen how when there's a bull market, and it really gets going, we see this euphoria and accelerated trend rising. We saw it again before the GFC, and we're expecting it to happen again. We have only just seen the start of it, or that's what we think at the moment. But we need the miners to do it for us, because the banks can't do it, carry the load on their own. We know that. Could this be a different time where the whole cycle fails? That's what we're waiting to see with some of our miners and whether they're about to take off. But I thought I would just put a chart of BHP over the history of the market to show how BHP doesn't always flow and run with the market. So I've got a trend line here which I'm going to apply, but just to have a look at the angles of some of these trends. Now, we saw the sideways trend on BHP here. Our market had actually fallen and then taken off. So don't think necessarily that we always see a run on these mining stocks at the same time as the financial stocks. We know that's not true. During the GFC, we saw a two-speed, or before the GFC, we saw a two-speed economy initially prior to this rise to the all-time high. And it's not uncommon for BHP to have these sideways moves. You know, this big sideways move here as well was another clear sign that BHP was getting wound up and preparing for that next rise. So that's what I'm thinking is happening at the moment, that we're seeing that same sort of thing happen again with BHP, but we just need that confirmation. We need a pullback in the market, which we're getting at the moment. We've seen this reversal. This is nothing to be concerned about. It's all part of the market's ebbs and flows. I'd like to see a bit of a pullback, and as you two rightly said on the Monday report, the market could come back to about 8,400 points to test. That once that's done, we'll get a fair indication about how strong the rise could be, or whether there could be a further slight fall. But none of us are concerned about this at all. We just think this is a great opportunity, and if you're not in stocks at the moment, now's the time to really get ready for it.
All right, now on that point, I just want to hone in on that a bit more, because obviously we are in reporting season, and volatility is heightened during reporting season, especially if companies exceed, fail earnings. You're going to get wild moves like we saw with some of the banks. WiseTech was another one. Well, that was for different reasons, but let's not go there. In terms of what we've seen, the pullback that has happened, you've just mentioned that no cause for concern.
Just creates value and an opportunity.
Yes. So what would be the signal for cause for concern moving forward on the All Ords Index, if not what we're seeing right now?
If I tell this now, Phil, then I'll have nothing to talk about next month.
Very diplomatic response.
Give me something, please. Give me 10 seconds.
Okay. I'll just catch my breath a little bit there if I can. Look, my marker for the line in the sand of the cause for concern would have to be under this low here. I wouldn't be too concerned about our overall market unless it came back below that level, and I'm not expecting it to do that at this point in time. If we look at the angle of the rise coming up under that low, the market's just trying to catch itself, and it could take out this low here in December 2024, but hey, like Phil said, it needs to come back in order to create value and to move up. So at the moment we've got 7.4. A move down further to around 8,200 is probably realistic. That's about a 10%, 11% fall, which is not uncommon for our market.
Yeah, great call. All right, well, that is it for our thoughts on the Aussie market. Let's now jump into more stocks and answer your questions. Ross writes in regarding SGR. I find it hard to believe that things can get any worse than what they are right now, having the belief that the company will be bailed out by somebody. Should I invest a moderate amount while prices are low, or is that deemed to be too risky given the circumstances? Now, Pedro, spoken about Star Entertainment for ages now. It seems like we're talking about it every week on one of our shows.
Definitely.
In light of what the company is doing, obviously we've been saying stay away from a technical perspective, and it's continued to keep falling.
Yep.
Is now, based on that email, is it a good idea to get in because it's considered cheap? Or is there too much or too many issues right now with that company?
Well, unfortunately, even if he wanted to, it's too late. The company's actually in a trading halt.
Yep.
They've suspended their trading because they've failed to bring out their financial reports.
On time, yeah.
On time. So, they have halted their shares. You can see that the chart is actually in a trading halt. So even if you wanted to,
it looks like a complete disaster.
It's a disaster. We've been talking about this for a while.
We've been getting asked about this one for months now, and if you look at that chart on the weekly chart, you can clearly see 4 months, every little spike that's happened. And what's been tricking people is, even though it's spiked up for a week, given where it is at current price levels, that coincides with a 20-30% rise for the week. And people are thinking, okay, must be turning the corner.
Exactly.
But really,
this is a great example of why you don't catch a falling knife. And really, the fundamentals didn't stack up and the technicals didn't stack up. Both of them in line. And I really feel for that Hong Kong investor that was on the news that kept buying and buying as the share price was falling and thinking that he's averaging in.
So to answer the question, the email, is it a case of stay away? And what would you like to see if you're thinking about getting involved with this stock?
I would like to see so much more. Well, first of all, their shares being reinstated and being able to be tradable in the market. And then you'd want to see at least the stock to trade above these levels here, so around that 70 cents. You'd want that gap to be refilled and all of this price action to be broken above. But even then, the negative sentiment around this company is so bad that you got to wonder why you would even want to pick this up.
Because it's cheap, apparently.
Because there's so many other better stocks. I would just, stay away from this one.
Yep.
Janine,
so
same
don't
thoughts?
put good money after bad and then put it into an investment that potentially is going to be liquidated. Is that what you're suggesting?
Well, yeah, right now they, for all we know, they could be taken out of the market. If you're already invested, unfortunately, you could actually lose your shares. It'll go private, and then you have to go through these secondary brokers to then sell them privately, and it's a whole lot of trouble. You don't want to go through that. So I'd be really staying away from this. It's not a good one. Now look, there was some talk about lifelines and new debt consolidation and maybe turning some of their companies, some of their buildings into apartments. That might bode well for the company, but you want to see a lot more price action on the chart before you do anything. Yeah,
you're saying you don't really need to be the first in this. Wait till it turns the corner.
100%.
Janine, are you in the same boat here?
I think it's a good example to show people just from the risk point of view, because we can see that all this time through here, people thought there was an opportunity. It was probably pushed up with news and went to really interesting heights around that $5 mark, but then it just kept on a slide. And we say, when the stock's trending down, that's the highest risk time to be in it. And so we're seeing this trend continuing and still people are trying to accumulate it along the way. It's disaster, isn't it?
And volume's picking up as well. I'm noticing a whole new wave of volume coming in, but that doesn't necessarily mean that tomorrow something's bound to happen. As we showed in last week's show, that could take time for the stock to find new volatility based on the big volume. That could all be just dumping.
Oh, look, I really appreciate, you having put this up and to discuss it. It's a really interesting one.
Yeah, all right, great stuff. Next up is Heidi, who writes, I'm considering Sol for a short to medium term trade. Although it has triggered one of my rules, I would be looking at an entry with a strong weekly close above $35.80 for extra confirmation. All right, Janine. Heidi with a...
Heidi, well done. Good stock choice. I like it. And I like the level that you've put on the chart. If we can go and have a look at that now. You can see this line in the sand across here that Heidi's talking about. And very, risk averse as well, not trying to jump in before it's actually confirmed that it's likely to go up, because it's hit its head there so many times. And you think 1, 2, 3, 4, 5. On the fifth go, you would have thought it would be through, but it's still not. So, I'm not excited from the point of view that, I'm going to read anything into it. I don't care either way. If it goes up through that level, great. If it falls back below, say, the trough here where the blue bar is in February, then it's going the other way. So you don't try and catch it as it's falling, whatever you do, because if it does fall away through that blue bar, it could end up taking out this low as well.
Now, when you're looking at that chart layout, the question was a short to medium term trade. Do you think that's the right strategy for this stock, the way it looks today?
Yeah, I don't have any issues with the time frame that you've suggested, Heidi, on this trade, and that's a really good question. Once it gets through that level, there's decent upside to the high. So it probably would end up being over the short to medium term anyway if you're in it, and it could even break to the all-time high and break beyond if it does get up to that level.
I actually like this as a medium to longer term play because Saul Patterson has been around for a long time. They've got a good management team, well diversified company. They pay good dividends. So this is a nice one for like a super type, portfolio. So if it does break above that $35.80 level, I don't have a problem with that. I actually do quite like it. It does trend nicely when it does get on those runs. Yeah.
Now, from your perspective, when looking at that chart, obviously Janine gave her levels where she would, turn the idea into stay away. Where are you looking? If this stock starts to fail, what levels would make you say, okay, not for me?
Yeah, I would agree that somewhere below that $32 level, that would be my line in the sand. And definitely if it breaks that low there of $30, I would expect $30 to be the next support level. So if it does fall below 32, 30 is your next line in the sand. If not, then we're looking at these highs here at around that, that $29 level. But actually that's very close to that $30 level. So you would expect that 30 level. I'm splitting hairs here. $30 would be the really strong support, and it might actually turn around from there if it does fall.
Yeah, all right. Watch those levels, Heidi. Great email. We do now have a text from Carl. And Carl is asking about AGL. Hi team, would like to know your thoughts on AGL. It seems to be following a trend line since November 2021 and is now bouncing off it. All right, so AGL, I know you love AGL.
Oh, mate, yeah, I do. Yeah. Energy and utilities right up my space.
Yep.
I do like it. I think that it's still in a medium to longer term uptrend. I think this one's got a lot more to go. The company's innovating. They are getting into different spaces. They're cashed up. They can, they can actually, like I said, innovate and create new avenues for electricity. Now, in terms of that trend line, I agree. If you want to draw a trend line under those troughs there, I agree that it is supporting that very nicely. It could come down and actually find some support around that $10 mark if it does fall. But from there, I would expect a nice little bounce, and anything above $12, then we're going again.
Interesting.
All
I
right.
like it too, but again, it just gives a bit of breathing space, doesn't it? The fact that it's pulled back last month and we can now just wait and be patient about it.
Yeah, so any concern around that $13 level that it's failed to poke through there?
Well, it has got 3 attempts.
It has, yeah. I'm not that concerned about it, to be honest. I think that it's just going through a little bit of a period that it's just consolidating and
well, you'd rather it
uncertain.
do that before the trigger than for it to trigger you in and then do the flip then.
That's right, and the only concern is that it does move sideways like we saw in this period here from 2008 to 2015. And interestingly enough, that was GFC.
Yes.
So that was the high there, and then it just consolidated sideways for so many years before that final blow off there. But I would expect it to come back at least to these $14 levels, which we've got a lot of price agreement around there. So that's going to be a very strong resistance level to break through that $14.
Yeah, so it's all about trade structure there if you are considering that is so important. All right, great text. Thank you, Carl. And that is it for our take on AGL. Now time for tonight's topic.
Can ETFs beat the ASX 200 shares in 2025? To unpack this, let's start off with what 2024 had to offer. And boy, was it an eye-opener. Last year saw new investors pile into the ETF market in Australia at a staggering rate to the tune of $33.5 billion, smashing the previous record of $23.6 billion set in 2021. But Australia wasn't alone. The biggest market globally, the USA, saw ETFs set a new record of inflows in 2024, reaching $1.6 trillion. And so with staggering amounts of flow heading into ETFs, where exactly is it going? And is it likely to continue? Well, the top 3 ETFs by cash flow in Australia saw money pour mainly into local and US index ETFs. A clear message: investors right now are seeking total market exposure through indexation rather than picking specific stocks. But is this a perfect storm brewing as the masses are now running down the same path? Michael Burry, who called a stock market bubble in 2007, is now calling for a bubble in index ETF investing.
Well, another big story that broke this morning was all from The Big Short. Now, Michael Burry said, quote, "The bubble in passive investing through ETFs and index funds, as well as the trend of very large size among asset managers, has orphaned smaller value type securities globally."
And he isn't the only one that has concerns. Famed investor Peter Lynch also blasted the shift towards passive investing, warning buyers of index funds that they are losing out on superior returns. It makes total sense, doesn't it? If you buy an index ETF tracking the index, how are you supposed to outperform the market? So how should you play the ETF space if you have a goal to outperform? Well, identifying key areas of the market and industry-specific ETFs that have the potential to shine will be the key to your ETF market beating strategy.
All right, now I want to get the team's thoughts on this because to me the biggest, standout from that topic was this bubble in ETFs. Michael Burry, as we know, the famed investor they called the Big Short, called the bubble in the housing before the GFC. He's also calling a bubble now in index ETFs. I can see it. There's this big flow into money going into this space. What are the concerns moving into indexed ETFs, if there are any, or is it a trend that's likely to continue on successfully in the future?
I actually believe that it will continue on, and who am I to argue against the Batman after all, if you've seen the movie. I absolutely love that. If you haven't watched it, you've got to watch The Big Short. But look, Michael Burry is an expert at that sort of thing, at bubbles and understanding when they're forming. And when we look at the market, we look for these as well. We're seeing the market and we're not seeing it stretched. We don't believe that people have been pulled into that euphoric phase yet, and that's still around the corner. So while that bubble may be brewing, it's nowhere near popping.
Yeah, but I mean, in terms of the schematics behind index ETFs, obviously buying an index ETF, and I'll get your thoughts on this, you're buying, the underlying is the top, say you're buying a US S&P 500 ETF, you're buying the underlying 500 shares, not going in and picking stocks in solidarity as part of a portfolio. So if that day comes where there is this overwhelming investment skewed in one flow or one stream, which is an index ETF, once that button gets pushed, I mean, could that spell trouble?
Oh, for sure, yeah. So you're essentially pressing one button to sell the 100 stocks. I think they're a great idea for the passive investor, for people that aren't necessarily interested in, getting to know the market and so on. While I do believe that if you just put your money in the top 20 stocks, you're going to do a lot better. But it's a good idea in theory. But those ETFs need to hold those companies as well. So that means that if you decide to sell your ETF, then you're pressing one button, which then triggers a sale of 100 different stocks at one go. Now multiply that by 1,000 or 100,000 or 1 million. all these people wanting to sell because the market is moving down or it's crashing, and now suddenly you got this flow-on effect, the dominoes start to fall because every time that a person pushes one button to sell their ETF, that ETF needs to sell 500, whatever the index is. So that's the dangerous part. But I do agree with Janine that we're not seeing that bubble yet. It is a nice little vehicle for people to invest in at the moment.
Well, it is definitely growing.
But what about alternative, the ETFs that are not index ETFs? I mean, people can invest in that and get an opportunity to get exposure to some of these niche areas that, if they don't have that stock picking knowledge.
Yeah, that's a great point, and that is something we are going to get into. But it isn't only Michael Burry that has spoken about this ETF space, for calling for this bubble. So we're going to do something special tonight on this show. And we're actually going to cross into Chief Analyst Dale Gillham to get his thoughts on the ETF space. Good afternoon, Dale. How are you?
I'm fantastic, guys. I wish I could say I was missing you, but I'm not. I'm having fun living the dream.
Well, I'm a bit disappointed. I was expecting a beer on screen, but
you can't see what's not on camera.
So let's get serious for a second. I know you've been vocal about ETFs. You know, we've spoken so much about the concerns moving forward, or just about the whole space, particularly index ETFs. So I'd love to get your thoughts on what you think about this movement and Burry calling a bubble in the index ETF space.
Yeah, I mean, we've been talking about this for 3, 4, 5 years, in terms of this bubble happening in ETFs. So what Michael Burry is coming at is probably giving validation to what we've already been talking about, because this bubble will happen. And the figures that Janine quoted, of money going into index ETFs in Australia and the US, that wasn't even during a bull market. Like we're in a mild bull market, but as the market matures more and we get into much more bullishness and that rampant speculation, the snowball is going to get huge. And probably the analogy that I can use is, you might be traveling on the highway in the country. You might be on the M1 in the country and everything's going great, and you think you're making great time to get to your destination. And all of a sudden you get closer to the city, and then more freeways come in and there's more cars on the highway. And you go further into the city and then more cars come onto the highway. And then eventually you hit peak hour and there's thousands of cars trying to get into that one highway, and everything comes to a standstill. That's what's going to happen. The more money that goes into ETFs, the more people are going to want to get out when the market's melting down. And that's a problem. So there's two issues with index ETFs. One is you're making worse returns than if you just follow the rules in my book. You will make better returns directly investing in the stocks yourself in a small amount of stocks, a concentrated portfolio. You're also taking lower risk, but you're not going to get caught in the inevitable rush to the exit, because you're not going to be able to make it. They're going to shut them down. They're going to stop quoting on the exchange, just like they did with managed funds back in the GFC. So they are high risk in my book. I'm sorry if that scares a few people, but we need to be mindful of what happens. Whilst everything's going good, it's okay, but it's only when the S hits the you-know-what that we need to understand, can we get out of it? And you can always get out of big stocks, even in a crash.
Yeah, great advice. All right, Dale, thank you very much for that. We're going to let you go. Enjoy that beer behind the desk. I'm going to be joining you very soon.
Cool.
See you, mate. Yeah, guys, so, great advice, great information. Obviously, we've been speaking about this for quite a while. Just to wrap things up and finish it off, obviously right now we're just agreeing that there's no cause for concern in this space just as yet. But hey, as Dale mentioned, you really need to be watching things closely.
Well, right now is a cause for opportunity.
Yeah.
And then wait and listen to us on the show. We'll be talking about all of the signs. You'll be watching Pedro and Phil and Dale talking about what's happening in the Monday market report. Just keep your ears to the ground so that you're fully up to date with it all. But there's nothing to be afraid of. The market is going to make some great gains over the next 12 to 18 months and could be slightly longer ideally, but we'll just be watching into 2026, won't we?
Yes, and let's now get to your point, because although index ETFs are the space where we're seeing these issues, alternative ETFs, they're the ones we're going to be talking about tonight, because we're looking for ETFs that can beat the market or have the potential to beat the market, and that is in these niche spaces,
Specialised ETF.
specialised
exactly.
ETFs.
Yeah, well, Dale's always talked about these specialised ETFs as being the place to look to get the opportunities rather than the index ETFs. And I absolutely love the analogy that he gave. I thought that just painted the picture.
Well, yeah, and even what you said, how are you supposed to outperform an index when you're basically tracking that index? It's not possible, but
Yep.
going and finding these niche sectors like we saw tech and financials last year, find that space and get that outperformance. So, that being said, let's get to it, mate.
Let's get into it. All right, so we'll start off with a specialised ETF. So on your screen now is the Van Eck 1 to 5 year Australian government bond ETF. So this has not been around for that long. As you can see, it first IPO'd in 2023 and it's just gone up. So that's a good sign. Now on the weekly chart, it does look a little bit erratic, right? So if you saw this on a stock, you'd think that it's quite illiquid. But you know, having a look at those, the volume there, thousands, but it is trading at $50. So it doesn't look that illiquid.
Look, I mean, does someone need to buy an ETF to get exposure to government bonds? I mean, why would somebody want to do that anyway? That's a big question.
That's a good question. Well, maybe they don't know how to buy a bond, but also the fact that you don't get the income that you would from a bond, right? I mean, we haven't had a look at the underlying, the prospectus of this ETF, but you know, usually you get a nice little income from.
Have you ever bought bonds yourself?
No,
Okay.
I'm not a bond investor.
The point was to find these ETFs that have the potential, and like you've mentioned on that chart, with the anticipation with that rate fall, then potentially you could see this one continue to go up. It is a US one, I believe, if I'm not corrected.
Well, Warren Buffett's big into bonds at times, but there are certain times of this market cycle when he will invest in those. But as we know right now, he's got a lot of cash there, and whether he's putting some of that into bonds is probably worth having a bit of a look. But he always used to laugh about why would someone want to put their money in a government bond if its yield is so low.
Yeah. But I mean, this provides so much more volatility, right? It's not just your typical
Yeah.
normal investment where you get that short movement. You get very nice volatility in this product, which is one reason why it is worth looking at. Now, you do have another one?
Yes, I do. I'll just finish up with that one saying that it is going up. So that's a good sign. So it is trending up. And if you're interested in that one, you know, feel free to check it out because we do have here that if rates start to fall in the US, then we could see a nice price rise on this one. All right, moving forward, this is ACDC. I'm sure a lot of people would have heard about this one. It's a battery tech and lithium ETF. Now you can see that it's just been trailing sideways for many years now, ever since 2020. I think that's largely due to the price of lithium. It hasn't taken off. Now, Rio went large on lithium last year, but you know, like we said, the lithium prices have been quite low.
So is that a topping pattern, do you think, or is that a consolidation before it takes off?
It looks like a topping pattern from first thoughts. You know, just the fact that we've got price that tried to make a new high here, bounced below, then made a new high back in 2023, and then actually tried to get back up to that price, but actually failed around these levels again, around that $100 level. So the fact that now it's come back to try to retest that level again, and it's falling from that.
Well, this is a really important time, isn't it? It's a test. It's a really important test. This next move down is going to tell all.
It will. If it breaks below these levels here, that 73, it's all
Even
over.
before that, though, I mean, even if it broke below these troughs over here and does so in a strong way, then I think that would have to tell you something.
But I mean, and just look at the volatility on this ETF, because on average, let's say our market does 9% a year, the All Ords or the index.
Yeah.
You can get months just on that ETF alone that are going to outperform that 9%, let alone a full year.
Yeah.
Especially if it's rising. And, you know, we're obviously coming on the back of Rio making that huge call on lithium, buying Arcadium at rock bottom lithium prices. I don't know, to me, it's one to watch in 25.
Could be
Yeah,
a trading stock, definitely. You know, if we go to the weekly chart, we didn't have a look at that. You can see some nice tradable patterns here. You know, you've got
Short-term trading.
short-term trading, yeah. So, you know, you've got this nice trend line here and it breaks below it quite nicely. And then you've got a nice, another downtrend here. You know, so it does form these repeatable patterns that could be used as a nice little trading stock or trading ETF.
ETF, fantastic. Next one?
All right, next we've got Asia.
All right, Asia. When we're looking at this one, we don't have a lot of history. This is the BetaShares Asia Technology Tigers. And I have looked at this one before and thought to myself, good excuse to get into an ETF. Obviously, I didn't get into that one, but if you did, then that was obviously a good time to get in. You're smiling. Did you get into it?
No, I didn't. I haven't. I wish I did.
So that would have been a nice little return. But I think that when we looked at these in the past, we've actually looked at some of the ETFs on the Australian market and proved that the return on some of the stocks that you could look at in that space was actually higher than going for the ETF, which sort of smooths that curve. But 44%, you're not going to scoff at that if you could get in, and that would have been the good time to do it. Should you buy now? Well, it's in a nice trend. It hasn't confirmed that it's stopping the current trend as yet, and there's still another 20% to the high.
What I like about this one is that you can actually get exposure to the Asia market, especially the Chinese market, which is innovating in AI, DeepSeek, all of these things that are happening without having to go there and actually buy the stocks themselves and get exposed to geopolitical risks and all of that. You know, so you can just buy the ETF and you can get exposure to all of it.
So you're saying it's lower risk doing it this way?
It's lower risk doing it this way. And you can see, look at the large spike in volume coming into it. We've got a lot of stimulus coming into China as well.
Yeah, and I just saw on that monthly chart 40% 1 year and 20% the next year. I mean, you marry that versus 9% on an index,
Yes.
you're going to cream it.
Yep, exactly.
Yep.
Beautiful.
Next one.
Next one is Atom. So this ETF, it looks like it's had better days. Now I'm not sure what this one does actually, but it doesn't look very strong at the moment.
There's a huge amount of resistance up around $17.
There is, exactly, and it's tried to hit that resistance level multiple times. You know, it's even bounced above it. Could have given you a fake out.
If it went back up and went through it, that would obviously be a nice line in the sand, though, wouldn't it?
Yeah, but it would have to go like cleanly through it, because you could have got psyched out on this move here. You could have thought, okay, well, it's broken above these two levels. You know, it's going to continue up only for it to reverse. But this is why bar analysis is very important. This was a very strong reversal here, and why you have to wait for the week or the month to finish before making your decisions.
Good point.
Let me play devil's advocate here for a bit, because the last time this got down to about $12.50, or if we just go back on that chart and have a look, it was the significant low and had a huge run up. That was one of the strongest runs it's had, combined with some of the highest volume that have existed on this ETF. If we get back to those levels again, where it's been proven buyers want to get involved, which is around that July 2024, where that huge spike in volume is on the weekly chart, if we can hold that low and go for another run, would you be changing your mind and thinking, hey, you know what, at least in the next 24 months, this ETF, it is a specialised ETF in its field. If it finds a base there, you could get from 12 to 17, 18, you're looking at, 20, 30 odd %. And this moves that much, if not more, in 1 year.
Now I've just had
We're not talking about catching a falling knife here, though. That's the thing. So it's not cheap at the moment, is it? Until it actually turns around and confirms that there's an entry there.
Well, the beautiful thing about technical analysis is because sometimes you can be early to the party in terms of knowing what to look for. I mean, we did our hot stock report on Monday, our show, and we chose mineral resources for one to watch. You look at mineral resources now, it's in free fall.
Yep.
But it is coming to a point where you need to start looking at it. And so this is probably one of those scenarios, rather than say, okay, it's falling away, not saying buy it right now, definitely not. We're looking for that confirmation. But if it starts to get to those levels where they,
So if uranium turns around, then it'll take off.
Right?
Yeah, exactly.
Potentially.
So we have confirmed that this is a ETF that tracks uranium and mining. So there you go. No wonder.
That's
now
why
we know.
Okay.
That's why now we know.
I was wondering, but all right.
Okay.
So opportunity there. Next one.
Yeah.
Bug, I like this one. Do you mind if I take that one?
Yeah, sure. Yeah, it doesn't bug me at all.
Advancements in AI also leading to more sophisticated hacks. A chart showing no sign of stopping. Oh, thanks for that little tip, Pedro. This looks really bullish, but I'm going to go to the weekly chart, given that we've got almost no data there to play with.
Phil's notes. By the way.
At the moment, it's looking like it's really trying to make a move to the next, make it the next leg up, but it's struggling with this line here, trend line here. If it takes off below that outside bar in January 2025, and I'll just expand that off to the right so you can see it a bit better, but we could draw a line in the sand under this low here. A push below that low could mean that we're about to see it continue to fall. So At the moment, it could just turn around and go back up on the angle of that line.
Are you playing any importance to the fact that it is in a space where obviously we're just seeing, hacks and scams tally up to one of the biggest spenders globally? The more that happens, the more cybersecurity is going to be required.
Well, we did a show on that at one stage where we looked at the amount of spend that's going on globally into this space, and it is going to continue. It's not going to get any smaller, as you're alluding to. So from that point of view, money would have to continue to pour into that space. So it could be one that trends on for some time. But in saying that, we don't want to just go on the story, as you would agree. The idea is to just let the chart tell you that. The volume has gone up. We've had this spike volume, a bit of selling at the top and then a pullback. So it's normal.
Yep. I like it if you want to get exposure to the cybersecurity space. All right, so the next one is cloud computing ETF. So this is another one that if you're not sure which direct company is involved in cloud computing and all of that, you don't know which specific company to invest in, you can just buy the specialized ETF and just get exposure to that.
How much did it go up as part of from that low to the recent high, just to get an idea?
Yeah, so from that low, it did bounce off that trend line, 50% up. It did go quite vertical though, so hence why it's kind of trailing off a little bit. It could come back to this level here, but we do have a support level much earlier, which is around that $14, $14.40 level.
And this is the monthly chart, so it's good for trading short to medium term, isn't it?
To medium, yeah, definitely. So it's from that 2022 low, you could have made a nice little return here. So if I put the price percentage, obviously you wouldn't pick it up from the bottom, but it's gone up around that 80% from that bottom there. But I do like the fact that it is moving in a bullish manner. You can see the structure is quite bullish. It's making higher highs and higher lows.
One of the interesting things about FOMO is people often think that they've missed out, so they then try to pick it while the market or the stock's falling. But in having a look at this one, you can see that even if you waited for all of this to unfold and then, you saw it bottom and then a nice strong move up, you still could have made a nice return, even if not 50, a good return in 3 months.
Yeah, and it's a safe entry as well. All right, guys, next one.
Next one, we've got the crypto ETF. So this is a space that you're interested in, right, Janine?
Oh, look, so much that I just go to sleep thinking about it at night. So what are you saying? It's got to take serious after Trump now.
Well,
come on, Phil.
That's Phil's.
All I'm saying is
what can I take serious?
We have to
chuck Trump in there.
This space a little more serious after Trump's recent backing for a crypto reserve, or not.
Yep.
But at least accept the fact that there is much more volatility in this space. Now more eyeballs are here, both from the retail and institutional end. And if you don't want to go and play off some exchange in Barbados or Bermuda that's not regulated, and you want some exposure to the crypto space, safe exposure, then probably this is something you should be looking at.
I 100% agree. And the fact that Trump is moving to create a reserve, a US reserve, may prompt other countries to then start doing the same. So as they come in and buy these cryptos, obviously it's going to push the price up. Now, obviously, on the other end, if they start selling, then you'd want to be out of this one. But on the chart, it does look like it's coming back to a natural momentum, and I like this. I think that you could get a nice little trade out of it.
All right, we've got the last one coming up.
Okay, cure. Now, we need the cure for something, don't we?
Oh, biotech.
With everything that's going on. So biotech has huge seed funding, and now, if easing cycle could expect huge surge. At the moment, it doesn't look like it's surging too much at all, does it? It's
so
going
should
the
I
other
explain
way?
that one?
I'd love to hear it.
So in the States, the Seed A funding is the highest level it's been in the biotech space right now than ever. Most of Seed A funding is heading into the biotech and AI healthcare type space. That's an S&P biotech ETF.
Right.
So, although the chart looks like it's consolidating,
So is this copying the US market, or what is it doing?
No, it's just saying that whilst there are huge flows coming into that space, and you both know how that biotech sector is. I mean, you picked the wrong stock there, volatility galore. So you do really need to be on top of it, and you've got that all stock specific risk with getting regulation, passing FDA. You bypass all of that by getting you bypass all of that by getting exposure in a field that is booming, if you will. So I don't know. I don't mind it. I think it's fun.
I like it as well, and you don't need to research the companies and know what stage they're at of the funding and FDA approval.
Look, whether we like it or not is totally irrelevant. It's all about direction. And if the chart's falling, Phil is right. However, right now is not the time. So
that's nice. You haven't said that too many times to me, right?
You can see that the pullback here, that it's in a nice trend on its way down, but it could come down and test that low in April 2024. This could be a sideways consolidation in preparing for another rise, though. So it's just one to watch, as Phil and Pedro rightly have said.
Yeah.
But I would really like, my preference is to wait until it gets above all of that.
Beautiful.
Yeah, fantastic.
Agreed.
Now, before we go, I'd love to get each of your best 3 out of that list. What are the top 3 you're looking for?
Oh, right. Well, I would include this one in one of my top
Me too,
3.
only because it's got a huge upside potential relative to the previous
Hang on,
alternative.
Switch up real quick.
Can't change your mind that quick.
That's all right. You can come to the party.
Oh, thanks.
That's fine.
I appreciate that.
2
What
more?
a gentleman.
So this one, and I like the fact that it's going to cure health issues and so on. I would, just for a short term, crypto. The crypto one is looking like it's trending nicely. I'm not sure about you, Janine.
I'm not weighing in.
You're not weighing in. And I do quite like the Asia one as well.
Okay.
Because it is in a nice uptrend, and I think that the market is going to do quite well.
Janine?
Look,
Actually, the question is, which ETFs do you think will outperform the index? That's
really?
more of a...
the ones you've said, I would agree, would do that job as well.
Yeah.
Okay.
Janine, what are you thinking?
Look, as far as outperforming the index, I'm going to cross bonds off completely.
Yep.
Look, if tech and lithium take off, battery tech and lithium take off again, there could be an opportunity there, but it has to jump a lot of hurdles for me to even think that this is taking off. So I'd be really conservative about this, not trying to get in early. I'd be wanting to see it get above there. And look, obviously it has to get through this high first, but that's not the top of my list. The one that we had before is my preference, but I'm trying to do something different to Pedro, and I'm really struggling here.
You can
to do
choose
that.
my one.
Cybersecurity.
But I like this
Yep.
one, cybersecurity. That's always got to be in there. So that's probably for me a safer sort of bet. Yep.
Okay.
All right, great stuff, guys. Now, moving on. If you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 9290 9988. That's 03 9290 9988. Or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Jules writes, could you please take a look at Downer EDI? It looks like it has several continuation patterns over the last year, and it has run up over 100%. Do you feel there is enough upside left in this run? I am waiting for a confirmed entry, but will likely wait for it to trade above $6 if it does trigger. All right, Janine, Downer EDI.
Yep.
An entry above $6?
Good choice. Or thereabouts is great. I like it.
Yep.
Should we look at the chart?
Yep.
Pedro might like to do that.
I like this one. Thanks. I do agree that we've got these nice, continuation patterns, and they are quite repeatable. Price then, bursts out of them quite nicely. Now, above $6, is that too late? Now, it depends what type of trader you are and what your risk profile is, but you are potentially leaving 11% out of the table. Plus, if it does get through that level, don't think that you're the only one thinking that you're going to pick that level. There's sellers on the other side.
Saying, okay. Are you saying that potentially getting involved at $6, you could be met with some early selling?
That's right, because the thing with resistance levels is that they're quite easy to spot, and everybody uses support and resistance. So you go into a period where there's an oversupply and there's an undersupply. So there might be a lot of oversupply at this particular level here of $6.
So let me ask you this then. What's more important if you're looking to, because above $6 provides confirmation,
yes,
right, of further upside, potential upside rise. But as you've mentioned also, it could in fact also spell a rise up and then seller activity. So is the most important thing here how you structure your trade? Because, I mean, as we all know, it's quite common when you get in on a stock, the more confirmation you give, then the more likely is that it's going to come back down to find its feet. But the skill as a trader is to accept that and let the stock play out for only then to continue on in the longer term direction. So Is trade structure important above $6 from, more so in your opinion?
Yeah, I would actually be back testing this like crazy, you know, really just figure out what those rules are, what the best rules are. Don't go purely by price levels. And that's what I'm trying to say here. Because if you go purely by price level, I'm going to only enter above $6. You don't know that that's the best spot for your entry. This could work good on multiple tools, and it has been trending quite nicely. And look, it's actually respecting that uptrend line very nicely. So, you know, I'm just thinking the upside to that resistance level, and you've only got, what, 6% downside?
Okay, you're saying better risk reward potentially.
Better
closer,
risk reward. Yeah. If you get too close to that resistance level, you may be, you know, met with a lot of selling.
Interesting stuff, Janine.
I feel confused.
Yeah, too many things going on.
I'm trying to find an opportunity here for, you know, for this person. So, but looking at the stock from an upside point of view, you can see that there's plenty. So that's one of the things when I first looked at this, I thought there's plenty of room to move to that all-time high, taking the big picture perspective. Given the fact that it came down and tested this low and made that higher low and then moved into the trend, to me it looks more like it's got the power to continue that run. And while I take on board what you're saying about her entry, I think that sometimes it's better to be a bit conservative with a stock like this where it's volatile. It's gone up twice, 3 times. If it goes through the 4th time, probability says that it's more likely to keep running. But to your point, the challenge here is being able to get in at a decent price, I think, because we can see that most of the rise has happened in 1 week when it's broken through.
Exactly. Now, and then it comes back to retest that level. Yeah,
and that's where I think the power of your point is. We got 20% in there. Our markets are not contrived at all, are they, given that we are looking at a 20% return. So we could see a repeat of that again, but it's the challenge about when to get in. And the funny thing is that even the most simplest rule that you'd find in the Trading Mentor could work on that with a certain combination of the way that you look at things.
Yeah, it's fantastic. You're thinking purely about that risk reward scenario coming, staring at you right in the face, and you're thinking longer term, big picture where this can get to. So both very, very valid points. We do now have a text from King who says, "Hi team, after your thoughts on DVP, just watching it at the moment, has had a short-term rise, but am mindful of the longer-term downtrend. Would love to hear your analysis. Cheers, King." Thank you very much, King. I love when King texts in, just saying the name King. I wish I was called King.
I think you've got a fan.
That's an awesome name.
All right, shall we have a look? King. I think I better take over. Develop Global Limited, DVP. We're on the monthly and weekly chart. Looking at that consolidation on the monthly, it's just incredible. I mean, it had incredible legs and went up for 5 or 6 months there, maybe a little bit more. But most of the rise happened in 5 or 6 months. And then this consolidation that's been going on for so long. I don't like it from that point of view, given how patchy that it looks. It sort of reminds me of Min, that stock that really ended up doing really well after it broke out of all of that mess. But it could, so it could repeat something similar, perhaps, given that we've seen this rise move up now. A lot of resistance is around this high here, which is still 24% up. So there's still an opportunity to make some money out of this stock, I think, in saying that. So 20 odd to, 40 odd % as a potential, but let it just drop because it's pulling back now. So that's a bonus, the fact that it's taken off and now it's having a breather, because the next rise when it goes through could be the one that you want. Yeah,
beautiful. And the fact that more volume is coming into it as well. I mean, look what this volume did over here, even though it wasn't a down bar, but then we see volume starting to pick up again. So I do agree that, you know, anything above that $3 level could be looking strong.
So my concern would increase, I guess, if it started to pull back closer to the low of this week here, which was 24th of January 25. If it started heading sort of around 245 or thereabouts, 250, I'd be quite a little bit more concerned about it. If the more bullish it stays, if it only has a couple of weeks down, 2-3 weeks down, then to me it looks better if there's a turnaround.
Yep, agreed.
Yeah, I've just been thinking King Philip sounds nice, doesn't it? As a
All right.
All right, I've got to move on.
That's it. Put the crown on.
We now have another text from Dave. Dave says, "Hi guys, would like your thoughts on CAN. I own a small amount and am willing to hold them for the long term. Thanks, Dave." All right, Can, and it's a long-term play.
Can. All right. So I believe that this is a cannabis stock, cannabis play, as we have seen, like Little Green Farmer. Yes. Now, I would actually prefer Little Green Farmer to this one, just for the fact that this bar, that rejection is quite strong.
It looks like what happens if you have a little bit of cannabis, this stock, doesn't it?
A bit of a spike and then
everywhere.
back down again, right? So, the fact that it did actually try to come up and break above certain levels, but then notice how these closes, and this is for the viewers, that it opened and closed around that same level even after that whole price action. That's not a very good sign. And the fact that then after it trailed down below it is not looking good. However, it has come back to this natural support level here around that, 3 cents. So 3 cents, you're really playing with a micro cap here.
Well, are you concerned a little bit about the I might even get your thoughts on this, on the liquidity of something like this? Because if it can spike like that in 1 week, imagine what it could do on the flip side.
Ooh.
Still, I mean, it's just such high risk, and then how do you actually exit?
But it's long term. Does that play into your thinking at all?
I'd say no way.
Okay. Do you want to explain a bit?
Just way too volatile. I think the monthly chart tells you everything. I mean, long term, why would you set yourself up to fail when you're looking at a stock that's done nothing? It hasn't proven anything in the past. It needs to put some runs on the board. So let it do that with the suckers money and the high risk money down low. I mean, I would even probably go so far as wait until it gets through all of this rubbish. Until we've got a decent long-term trend in play.
100%.
All right, there you have it, Dave. Not just yet for Can, but next is Dion, who writes, I was after your thoughts on SHL. The stock broke the long-term downtrend in November after finding support in May, and I am looking at an entry above the December high for a medium to long-term trade. Last month was bearish, so if it falls below the November low, I will let it go for now. All right, now this is a good email because he's not only thinking about an opportunity on the upside, but the exact moment he's going to get rid of this if it goes pear-shaped.
Yep.
That's fantastic.
It is,
Is he on the right track?
Yeah, I think so. I would even add another support level or an extra line in the sand, and that would be around this level here. So I'm just going to draw a horizontal line. I think that below that $27, then if you wanted a little bit of a tighter stop loss or a tighter level, that would be a good level to draw a line in the sand.
But that's shorter term though. So what if his thinking is medium to long term?
If it is medium to long term, well, it depends if you're in or not. So if you're not in it, yes, you can let it go to this level. If you are in it, then I would be exiting a little bit before.
Okay.
But I do agree that above $29 is looking great, and I do like this stock. Sonic Healthcare, it's in the healthcare space. It has broken below this long-term downtrend, and it has consolidated nicely.
I mean, maybe his thinking is by setting it under that low, it's still going to be above the long-term trend line in its unfolding. So I don't have an issue with where he set that stop loss at all, just because of it took so long to get through the angle of that trend. And often stocks will come back to the angle of the trend as part of the test. So, I congratulate you for having the strategy in place that you have and the risk management. Well done.
Beautiful.
Fantastic. All right, moving on. Our next email comes from Jimbo. Google says ASX listed companies are required to report their financial results at least twice a year. So my question is, are both seasons typically met with the same volatility in the market? Also, I was hoping you could share some wisdom on other times of the year that the market is predictably volatile. All right, Janine, I mean, obviously markets report or stocks report twice a year, and that is generally met with higher volatility. Are there any other times that you could think of?
Look, there are times where, around October, historically, they've said that the markets can be more volatile, September, October, but it can also be in January. A lot of people don't realise that January is actually often one of the most volatile months on the calendar in the stock market.
Now, could that be because trading dries up, people going away on holidays? Because volume generally is much, much smaller during January than the rest of the year.
Well, in December.
End of December. And
it's true. So we see that dry up. So all of a sudden people come out of the woodwork and want to start buying the stock market again. That's what happens. Or the institutions just hang off. They all go on holidays, and when they come back, they just sell it down.
Push the button, yeah.
Yeah.
Any other times you could think of? Because we're talking about predictable volatility. Obviously,
Yeah.
there's news announcements that come out of nowhere.
Yeah,
here and
well,
there,
I would actually, guide him to, if he does have Optima, have a look at a seasonality chart. That will tell you a lot, and that will actually show you the different months and what the volatility looks like on that. So just have a look at it for yourself. I'd rather empower you to do it yourself.
Yeah, great point. All right, we do now have Nicholas who writes in, I recently got back into investing and wanted to try my hand at some stocks for growth. One that caught my eye was Telix Pharmaceuticals. It's had a rapid growth in its revenue and the share price seems to be in a short-term downtrend but long-term uptrend. All right, Pedro, Telix now, I know this one's been on a huge run.
It has, yeah.
But seems to be in a short-term downtrend. If you would call it that.
Yeah, I wouldn't agree with that,
Yeah.
that it is in a short-term downtrend, definitely on a long-term uptrend. This has been on an absolute tear. What's concerning me is that this huge volume coming into here is on this reversal bar here.
Yeah.
The fact that it closed on its low and now this bar, this weekly bar is starting to close on the low as well. So it's coming off a very large run. Is this the best time to be looking at this stock? I don't know. I personally wouldn't be trying to pick this one up at the moment. It just looks very vertical. I know that the financials still looking good, but really it's a little bit risky from a technical point of view.
And just quickly before we go, I'll get your thoughts on this. Going back into the market, looking for growth stocks, would this be your first choice if you're going to dabble back in, or are you looking for something a bit more stable in terms of volatility?
When you say going back into the market, can you give me a bit more clarity around what you're talking
Well,
about?
the gentleman said he's investing for the first time in a long time, and this is his choice to wet his feet again.
There's two things here. One is if a stock's been in an uptrend, there's a potential that the trend could run higher rather than trying to bottom pick something and then have it fall away. All it is about is your money management and your risk. So setting a stop loss and making sure that you're not investing positions that mean that the amount that you could lose is too much for what your psychology can handle. So it's all about that. So we had situations at workshops where people would put up their hands and then I would say, how much is it that you want to risk? $100. We would continue along that line. Most people drop their hands when it gets to around 1,000. But in saying that, the reality is that a lot of inexperienced people risk more, a lot more.
Yeah, no, great points, totally agree. All right, well, remember to send your questions to info@wealthwithin.com.au and we will answer them in next week's show. Here's what's happening next week on the Australian stock market.
Next week in our main topic, we get into the top 5 stocks to buy under $10. Now, if you want more expert insights, check out our video on the top 10 most traded stocks. If you love our show, remember to hit that like button and subscribe to our channel. Thanks for joining us tonight. We'll see you next week on Tuesday at 7 p.m. For now, goodbye, good luck, and good trading.